Hey everyone, my apologies. It's been a while since I've done one of these. And given how the market's trading today, I really wanted to take some time to give you some parameters for where we are and what's going on with the US dollar. So I don't think the dollar's done by any measure, right? I think we have quite a ways further to go, but we have put in a top of some degree. So the question now is, what information do we have at hand to help contextualize this top? So let me walk you through that. So I think we have a parentheses Roman numeral wave 1 complete here, right? And then we have Roman numeral parentheses wave 2, and then we have a very impulsive looking advance that's broken out of this base channel here. All right, so now let's look at some Fibonacci relationships. So, a common objective for wave 3 would be for it to reach 161.8% times the length of wave 1. We don't have that right now. That doesn't mean that we have to reach this target, but I do have a count that I think gets us to that target in a very plausible manner. All right, so the big problem, right, that I have is that I can't count this as a complete third wave. I think this is 1, we have a shallow 2, and then here we have 1, 2, 3, 4, ending diagonal 5 for wave 3 of 3. And then we have a steep setback. Now, alternation, we have a shallow wave 2, we have a steep wave 4. I like that alternation. So for me, this is a really nice, or it's a 1, 2, 1, 2 scenario, which would see 3 of 3 go absolutely bonkers. Right now, I do like to work with more conservative expectations first until the market proves otherwise. So I like this interpretation: 1, 2, 3, 4, 5 for 3 of 3. This is 4 of 3, and then we're going to get 5 of 3. So right, the key level overlap, right, would be this is wave 1. So until we overlap 110 in the index, I don't really see any reason to be shorting the dollar with any kind of vim or vigor. So here's some other technical things we can do. We can overlay the min line of the base channel. We can take a look right at Fibonacci relationships. So if this is wave 4, what's the most common Fibonacci objective for a steep setback? It'd be the 61.8%. So we have a little bit lower to go, perhaps one more new low in the dollar index, which matches up very nicely with what I see in a lot of the majors anyway, followed by a 5-wave advance, right, for wave 3. And then here's the other thing, right? We can take a look at what Fibonacci extension objectives would get us to that wave 5 of 3 up here, right? So that, if we're taking a look at the relationships between waves 1 through 4, assuming that wave 4 ends around that 61.8% retracement level of wave 3, then we're looking at a little bit below equality, right? Where wave 5 would be equal to the distance traveled between waves 1 through 3. So that's not the most common objective, but it's absolutely acceptable. The other thing that we could take a look at, right, would be the relationship of wave 5 relative to wave 1, which would be quite a multiple, right? It would be over a 2618 multiple of wave 1. So again, unusual, but not at all impossible. Now here's the thing: given we have a shallow wave 2, I do think that it does put the possibility of a much deeper launch, for this wave 5 of 3 to, I do think it sets us up nicely from that perspective. The other thing I can do, right, is I can start channeling this move here. And although we did poke out the top of this corrective price channel, we're still trading quite nicely within it. So that's the other option, right, is that wave 4 ended, earlier this morning, and we have wave 1 up, wave 2, and we're going to go launching into wave 3. What would give me confidence that count is correct? Couple things. One, if we take out 113.78, so in other words, the B wave high here, or if we get a 1, 2, 3, 4, 5, followed by a 3-wave setback. That would also give me confidence that the dollar index has bottomed. Either way, right, I think we should be looking for opportunities to buy the dollar rather than to sell it. So, everyone's been talking about the pound. What the hell is the pound doing? Let's take a look at the pound. man, I love this chart. Okay, this chart looks really, really cool. So if I zoom out to the daily, you can see this longer term price channel, right? It's the 2-4 trend channel here, right? Let me just adjust the parameters slightly. And although we're poking above it, it's very common for for fourth waves to find resistance somewhere along this trend channel. Now, here's the other thing, right? We also want to be looking at Fibonacci relationships between waves 3 and 4, and that puts wave 4 at a 38.2% retracement, would put wave 4 a little bit higher here, which is a little bit more in line with what I was saying just a couple minutes earlier with regards to the dollar index in terms of how I'm looking for one more low in the dollar index to meet that 61.8% objective. Now, there's no rule that says we need to meet a 38.2% retracement for wave 4. I'm just saying that's the most common relationship. So I can also put up a 23.6% Fibonacci retracement level, and you can see that we've actually met that objective. All right, so that would be another objective for a shallow corrective objective for wave 4. So the only reason, right, that I'm not saying we should be pulling the trigger now is because I can't count 5 waves cleanly up for wave C. So I think we've got wave 1, wave 2, wave 3, wave 4, and I think this is wave C right now, and we're going to get a slight overthrow of this corrective price channel. And then that gives us a very clear key level to work with for wave 4 of C, which would be right here. Personally, I wouldn't be keen to trade necessarily on a break of 110.25. I'd really want to see an overlap between waves A and C first, right? So for me, that would look something like this, for example, all right? So just giving you a few parameters here in a couple of the majors that I'm looking at from a trading perspective, all right? Hope this video is helpful. I'm going to keep it nice and short, right around 7 minutes is perfect. Thanks, guys.